Folks, welcome to the best stock pick analysis video. These are the stocks that we will be looking to possibly trade in the coming week. We'll start off with Facebook, then IPC, the Hospitalist Company. I never heard of them before. IPCM, the symbol. Imperva Inc., this one I went over last week as well. DWCH, Data Watch Corp. EXA Corp. Sterling Construction, STRL, the symbol. ZIXI, Zixit Corp. Everywhere Global, which is EVRY. Tesla, TSLA, we're all familiar with them. NEWL Lead Holdings, NEWL, the symbol. Last one up is going to be Amazon.com, AMZN, another one that we all know of. Okay, let's begin with Facebook. Well, before I get to the chart, I did two videos with regard to Facebook as well as Starbucks this past week. And I took issue with Guy Adami and his promotion of Facebook, of purchasing Facebook into earnings, which I couldn't disagree with more. I did two videos if you're interested. One was published on the 24th. The first one was published on the 22nd. You can find that on my blog page at thecontrariantrader.com. Please check them out for your viewing pleasure. And let's get to the charts. All right, so Guy Adami came out on the 22nd of April saying buy Facebook into earnings. I said do not buy Facebook into earnings because you're at resistance. It's a sucker's bet. The stock market provides all sorts of fantastic money-making opportunities. However, discipline is essential. Following rules is essential. And one of those rules is that you should never buy at resistance. Never buy a stock prior to breaking through resistance, especially when it's rallying on sequentially up volume. That means that there's no institutional support. So I said on the 22nd, do not touch it. I would avoid. The stock came out, beat on revenues, beat on earnings. That stock should have flown through the air, but it didn't. Why? It's because their CFO resigned, and that was announced when earnings were released. That muted any upside potential, besides the fact the stock is trending downward on a daily chart. So we're down minimum 6% since Guy Adami's call. Bad call. I disagree with it then. I still disagree with it. I said on the 24th when I made the follow-up video that I still wouldn't buy the stock because I thought there was further downside. Sure enough, we dropped another over 5% on Friday alone. When would I buy the stock? At a bare minimum at support at 55.88. I'm not a big believer in triple bottoms, so I'd like to see whether or not we hold the support level. If we do, perhaps we'll get involved with it. But there's a good probability, and when you take a look at the weekly chart, I mentioned this on the 24th and on the 22nd, the weekly chart on the 22nd looked very, very bullish. By the 24th, after earnings were released, the stock was still up on the week. However, it had put in a topping tail, a sign of selling pressure above. Buyers back here wanted to get made whole. Also, you had some profit taking. And I warned on the 24th, watch if it closes below prior resistance, which should now act as support. And it failed to do so. That's a breakout point failure. And quite often, when you see these occur, not only do they fall back down into their prior, in this case, a triangle formation, but they also take out prior support. So I would be a buyer at lower lows. I'll go into that with numbers on the week ahead commentary if, in fact, we do see lower lows. If we break out and close back above this now resistance line, then we'll reconsider our trade and possibly look to buy the stock, assuming that the price and volume action implies that there are buyers, therefore support below. Other than that, I'd be a bystander right now on Facebook. I don't think it's the greatest short in the world because it's a very, very strong stock fundamentally. However, if Facebook can't rally, I'd be interested in stocks like Twitter, which we've shorted recently, booked profits on ahead of earnings season. They don't have the fundamentals of Facebook, therefore it's a better short, and you can see how it's behaving. Facebook was down 5%, Twitter was down 7% on Friday, so you could see how it's underperforming Facebook and we want to use that relative underperformance to our favor. So Twitter is one that we might watch as a short. I like Facebook as a long, but just not now. I think there's a better risk-to-reward entry point in the future, and I'll be going over that with members on the week ahead commentary, which goes out every Sunday. Video number 1 is the market pulse check. That's an overview of the overall stock market, the health, where do we think we're heading in the coming weeks, if not months. And then the second video is the focused stock analysis video, where I go into all of these charts, but more detail in weekly intraday charts, looking for good setups, as well as we review our current holdings, and we ensure that our stop loss points are well defined and that we have a clear exit strategy on each stock that we hold. So let's move on to our next stock, which is IPCM, the hospitals company. I have no idea what they do, and really it doesn't matter. The stock is at oversold levels, and frankly it barely makes it onto our screener. It has an RSI of 19.78. I frankly like stocks that are more oversold than this, so I do think that there is some potential downside risk, as noted by the high volume bars. And you see this, it's institutional distribution. Now you might ask, where would I have gotten out of this stock? Were I long? Well, you're not going to hear about, especially stock this small, on CNBC, and they're certainly not going to tell you to sell. That's why we use charts. Charts have the ability to visualize the signals that the markets are sending you. Now you might ask, where would I have gotten out of this stock? Were I long of it at its peak? Did the market send us signals? And what were those signals? Well, yeah, the market did send us signals. In fact, it all started in early November with this big topping tail. Now, we still closed positive on the day, very, very much so. But we did give up some of our gains, and the next day you saw some topping axes as well. Now, what that tells you is that you had some sellers in here looking to lighten up on their positions. So after seeing these types of topping tails or shadows, what you want to do is just take note. It doesn't mean sell your position. The stock was still in a strong uptrend. You may have wanted to book a little bit of profits if you had some real serious profits built up in the stock and now it was a little bit too overweighted in your portfolio and you wanted to lighten up a bit. Sure, that's fine. It's a good signal to do so. You had profits from down here. You booked a little up here. That's good money management. The stock was still in a strong uptrend. It did not break trend. It continued higher. And this was the real worry sign for me when I first took a look at the stock, is that it flashed a key reversal. And knowing me, were I long, I would have booked half profits. I would have taken half my position off the table. But we did close off the lows of the day. We retested those lows the following day, and we flashed a key reversal, a bullish one. So that would have kept me long of this position. However, I'd have drawn a line right here. A close below this support level, and I would have been out of the stock, because this was now defined support. So we rallied, made new highs, 63.70, pulled back, retested that support level a couple of times, attempted to rally, and on this day here, we see this cross of a candlestick. That's called a doji star formation. It's a sign of indecision between bulls and bears, and that tells you that a trend reversal is quite possibly at hand. Perhaps you wanted to book a little bit more profits on that day, and if you got your breakout, fine. If you didn't, well, then you protected your profits. However, the following day, it was clear you had to get out. We closed below the support level I mentioned before, and the stock went into a new downtrend, and you should have been out of that position. Now we're looking to buy it as a long. It still remains a falling knife, even though this got an RSI below 20. It's still not oversold enough for me. What we want to do is we want to take a look at IPCM from a 30,000-foot view. What does that mean? We want to take a look at the weekly and monthly charts. Look for historical support, because the probability of there being buyers at those levels is high. Without looking at those charts, we don't know where the buyers are or if it's even traded that low before. So we need to take a look at the weekly and monthly charts. I'll be going over those with members on the week ahead commentary coming out to you tomorrow. And I think on this we'll take a look at the intraday chart as well, 30-minute chart. Next stock up, IMPV. I went over this one last week. Another one. The market sent you signals. The RSI was at extreme overbought levels. The stock traded sideways and alleviated the oversold condition and then resumed its uptrend right off the lower band of the rising uptrend channel. Only one problem. The RSI wasn't confirming it. The RSI went into a downtrend, which is a divergence from the price action. The price action was heading higher. So although you may not have wanted to sell your position because you were still trading above the lower band of support, you wanted to take note of the fact that you had an RSI that was diverging, and I use a phrase, first out, best out. The minute that you broke down below the lower band of the rising uptrend channel, you had to get out. And you could even see where the market gives you opportunities to sometimes redeem yourself. If you didn't heed warning about this break below and close below the lower band of the rising uptrend channel, the market rallied the stock back and put it in a lower high. This was another opportunity to get out. The minute that we began to break down at 62 and it was clear that we weren't going to close back above the now resistance level, prior support, you had to get out. And sure enough, a couple of weeks later, we found ourselves in this position. Last week, it tried to hold support. It failed to do so. My guess is that's probably due to overall market weakness. RSI is 11.97. I like AMPV. We'll probably be trading this one this coming week. But as with all stocks, we'll be taking a look at the historical charts, weekly, monthly charts, and then the intraday charts. Do we have a good setup as we head into the morning? And we'll go over that with members on the week ahead commentary. Next stock up, Data Watch Corp, DWCH. Here, when should you have gotten out? Double top. We rallied up to 38.70, pulled back, rallied up to 38.69, failed to break out to new highs. The minute that we took out this support level here, you had to be out of the stock. Good thing about this stock is that you have the 50-day it's already crossed below the 200-day moving average. That's in the rearview mirror. RSI is at 15.95, which is good. It's an interesting stock. I like the setup. Stokes like a coiled spring. So what we'll do is, again, we want to take a look at the weekly, monthly, intraday charts. We'll do further analysis. The daily charts are simply not enough for us to make a decision of when we want to buy the stock. All the stars need to be in alignment. I still have some questions that need to be asked, even though I like the daily chart. And if I like the answers to those questions, we'll move forward. And I'll send out trade alerts to members. Next stock up is EXA Corp. Another one. Beautiful, beautiful uptrend. It traded in a triangle formation. It broke down below, really quietly broke down in a sneaky way. Broke down below that lower band of the rising uptrend channel. It did recapture that support level. The day it closed back down below that support level, it was a sign of weakness. You had to get out, especially when you had sequential lower highs. Never, ever good. And the fact that you saw these topping tails as it tried to break back above prior support, which was now acting as resistance, you had to get out. It wasn't a strong stock anymore. It was a sign that longs were moving out of the stock. So we have an RSI of 19.72, barely makes it onto our screener. My guess is that we still have lower lows to make on this stock, and once again, weekly, monthly charts will tell us where their historic support levels are, and we'll build a game plan using them to determine what is the best risk to reward entry point. It's all about your risk to reward entry point. The money is made on the buy, folks. Not, I have to laugh. If I don't, I go crazy. Not buying at resistance, okay? You don't buy at resistance. It's ridiculous. Not in front of, not ahead of earnings. I don't know what he was thinking. Next stock up, STRL, Sterling Construction Corp. All right, another stock in a really, really aggressive uptrend. Flashed a key reversal, big topping tail. That was a sign to get out. Also a sign to get out was you had this bullish key reversal right here. Note the tail, which implied support. Sometimes those will be called a hammer formation, but it failed to follow through the following day when it should have. And the minute we closed below the lower band of the rising uptrend channel, you had a couple of good reasons to get out. The first, failure to follow through on a bullish candlestick. The second was a bearish engulfing. The third was a bearish key reversal and a close below support. The fourth is that the stock had an RSI of above 80. So you had all that you needed to know to get out of this stock. It pulled back, rallied to 12.15, put in a lower high, broke down, broke this neckline, and the rest is history. Now we're down at 575 thereabouts. RSI is at 15.98. So we like it. 2 days of up volume, Thursday and Friday. Friday's up volume came in lower, but it still came in above average. So an interesting chart. But as again, we're going to take a look at the weekly intraday charts in particular on this one, because this one's probably pretty close to having the trigger pulled. So pay more attention to the intraday charts for a good setup. ZIXI, Zixit Corp, cool name, interesting. Another one, which was pretty much directionless, just traded in a wishy-washy pattern, one that I definitely wouldn't have been long of because I would have been bored silly. But you can see how it kept hitting resistance at, say, $5 per share. And again, the markets send you signals. Bearish reversal off of that level in September of 13, and in October of 13, we couldn't even make it up that high. We put in the lower high. There was no reason to be long of this stock anymore. You should have been out, and sure enough, we went into a downtrend. Volume implies that there's still institutional distribution. We never fight the big guys. We may be contrarians, but we're not nuts. So we don't want to fight the big guys. They're still selling off their shares. And I would consider this, for those who bought, the so-called smartest guys in the room, who bought back here and are now dumping down here, this is probably a capitulation sell-off, and the end is fairly near for Zixit Corp, and we'll be looking to get long. Let them keep dumping for all we care. It just gives us a better risk-to-reward entry point. Next stock up is Everywhere Global, EVRY, the symbol. This is one that I still think has some downside potential. They tried to rally it on Friday. This is another one that barely makes it onto our screen with an RSI of 19.94. I like it considerably lower than that. They tried to rally it earlier last week, met resistance, and those sellers who bought back here thought they were getting a bargain basement deal. After this little sell-off, after their purchase, decided, you know what, we better get out. And they dumped right into that strength. Friday's price action, another key reversal, and a close below $3 per share. I'm not sure what's going to happen with this stock. Volume was fairly tame Thursday and Friday. Once again, and I hate to be a broken record, but it's important, we want to take a look at the weekly, monthly charts to find out, is there historic support down here? The tail on this reversal implies that we're probably going to see lower lows, so we'll just keep it on as a watch for right now. Tesla. Okay, we booked profits. We shorted Tesla in early April. We booked profits ahead of earnings season because we knew they were going to spike the market up, and we wanted to close out some of our shorts. So we did so, and thank goodness we did. Now I'm looking to short Tesla once again. Ideally, we get a continuation breakdown below the 184 level. They report earnings on May the 7th, so unlike the geniuses at CNBC, I'm not going to be that arrogant to open up a short trade right in front of earnings season. So hopefully it trades in this range, and we'll look to open up a short position, assuming that the path of least resistance appears to be down after earnings, and we'll look to open it up after earnings, not before earnings, folks, please. All right, next stock up is NEWL Holdings, NEWL. First off, when I take a look at a stock like this, it's gotten hammered to such an extent, I really have to question whether or not there are any ongoing concern issues with the stock. So I haven't done that yet, so let's assume that there are no ongoing concern issues and that it's still a good stock to trade from a risk-to-reward perspective. Now, you can see here that Stock Charts, which is the program that I use for making videos, uses 30 as an oversold line on RSI. If you read books like Technical Analysis for Dummies, they'll use 20. They make generalized statements like buy stocks when they go below 20, which is ridiculous. If you use that rule of thumb, you go broke. In fact, let's take a look at the RSI on NEWL. It's been below 20 the entire month of April. Look at the losses you would have incurred had you listened to that ridiculous advice. And you can see from this volume action here, these are just institutions just really just looking to get out. So again, ongoing concern flag is on the track, no doubt about it. And I'll go over the weekly, monthly charts, intraday charts with members, and ongoing concern. As a matter of fact, if there's ongoing concern issues, we're not even going to discuss this one on the weekend commentary. AMZN, Amazon.com. This is a very expensive stock, and we shorted this one quite some time ago, booked profits quickly because the market just wasn't ready to tank the stock yet. So we booked our profits off of an extreme overbought condition, and the stock still continued to rally higher. Fundamentals be damned, valuation be damned. So when you were long of this stock, or if you were long of this stock, when did the market send you a signal that, you know what, this stock is frothy, it's really, really expensive, and maybe it's time to book some profits? Well, right here, this bearish reversal, that was a sign that, you know what, you may want to start scaling out of some of your position. And then we pulled back, held support at these levels, and then managed to put in several days of bottoming tails. Right there, you should have drawn a line in the sand saying, you know what, one tick below or close below that level, and I'm out. The stock recovered, as most momentum stocks will. The first sign of collapse never holds true. And it went on to proceed to make new highs. And when it pulled back to the 388 level, which just happened to be support, it only reinforced the fact that if I see a close, or if you were to see a close below the support level, in fact, I would have raised my stop loss from prior 383 up to 387, right at this, actually 388 was the low. So right below that 388 level, I would have put a stop loss order, preserved my profits. The stock did manage to eke out a new high, but it just rolled over and it just began its breakdown, and you would have been out. And assuming that you got out at the 387 level, you would have saved about $85 per share. Now we're breaking down below support on huge distribution. This is institutions. This is not mom and pop selling 100 shares. These shares are being dumped by the big boys, and you do not want to fight this freight chain. So Amazon is not a long, it's a short. So we'll be looking to short Amazon, probably using the put options on Amazon. And that's it, folks. If you have any questions, shoot me an email. If you're watching this on YouTube, please subscribe to my channel. If you're watching this on the website and you want to see future videos such as this one, please enter your email address. You will not be spammed. We hate spam too. And everybody have a profitable trading week. Don't buy stocks ahead of earnings. I think we proved that this past week. And use charts. Don't listen to CNBC. Talk to you soon.